Welcome back
Looking,
to another episode of In the Money. I'm Constantine Frandopoulos with Fidelity's Trading Strategy Desk. Welcoming Jessica Inskip, Director of Education and Product at OptionsPlay. Happy to see you again, Jess. How are you?
I'm doing wonderful, Constantine. It's lovely to see you again, as always. So much happening within the market, a lot to talk about. I'm looking forward to today's discussion.
Absolutely no better way to put it. An extraordinary action-packed week so far. Today is just Thursday. We still have to trade through Friday. Plenty going on. We have earnings on deck for Q1 from major corporations. We have the Federal Reserve meeting that concluded yesterday afternoon. We have the Treasury refunding announcement with Janet Yellen letting us know how she's going to be financing United States government operations. All sorts of things, including the economic data that's still on deck. So I'm curious, Jessica, for those in the audience who probably are not paying as close attention to every single detail I just mentioned, I know you are. What are you making of all of this? What are your thoughts in terms of what has transpired so far?
Absolutely, Constantine. There has been a slew of economic data this past week, and it certainly is a lot to digest. First and foremost, let's discuss the FOMC announcement. Rates remained unchanged. However, aside from the rate decision, I find value in the commentary and the Q&A session that the Fed provides that can certainly move markets. And we can attempt to digest all of that information and understand the economic data that influences the Fed decisions. However, in my opinion, it's best to assess how the Fed interprets that data. So again, this is my interpretation of the commentary following the Fed announcement, and I'll take you through my key findings. So number one, looking at the growth that we saw, we had some growth projections that were a little higher than anticipated. But despite growth, the question came up of stagflation. There was neither stag nor inflation. It's not in the picture. This is certainly a positive sign, in my opinion. Second, there's better balance. We're coming into balance within the labor market data. We still have a supply side issue. However, the immigration aspect has actually helped that narrative, something to watch, in my opinion. And third, and arguably the most important commentary would be the balance sheet. We're paying more attention to the bond market than we had in recent months. At least I am. So that's why I say arguably this is the most important commentary, in my opinion. He stated that there is a slowdown on the runoff of the balance sheet more than the markets anticipated. And he's mainly moving to treasuries and going to buy back those treasuries as they mature. In my opinion, this is a form of QE or quantitative easing. Now we have a major supply of treasuries coming into the market because we have higher deficits and we need to finance those deficits. And the way that occurs is by treasury issuing those securities. Additionally, tax receipts are lower than anticipated. So we have less on the revenue side, which could certainly add to that increase in deficit, more treasury issuance. So something to be cognizant of watch is signs of money market stress. But either way, the introduction of buying back of any way, shape, or form is easing of monetary policy. And I think this could be very good for a constrained consumer. Now, looking at the technicals, as always, I'm looking at the 13, 26, and 40 weekly moving averages. I see the 13 weekly as a major area of resistance coming close to it. And as a reminder, the 13, 26, and 40 represents 1, 2, and 3/4 worth of prices. I look at the market quarterly. I want to see prices move upwards. It's the way that I look at the quantitative view, if you will, say often on this show. But I would like to see us close above that 13 week. That's around 5,100 right now. I'm also watching for the strength in the US dollar to subside. And not to mention, so bringing it all together, that puzzle, currency intervention and certain countries that hold a lot of that treasury supply could have something to do with that US dollar. So it's all really related. But my rules remain. I'm not turning bullish until we close above the 13 weekly moving average.
Okay, Jessica, thank you for breaking down the reasons why you're using those specific time frames or frequencies on those moving averages. If our audience participants are used to looking at daily charts, this is a good way, right, to be switching around to a weekly and kind of keeping those quarters or those time frames in play. You know, about a quarter worth of action is 3 months, right? You're thinking
Mm,
about it in daily terms. So could be an equivalent, 13 week could be an equivalent to a 50-day moving average or pretty darn close to
is
it. So
very close. Yeah.
excellent. Jessica, so, for those of you in the audience who are paying attention, I mean, if the 13-week moving average is a little bit above 5,100 at the moment and the market sits at 50.50, let's say that we're a little bit more than 1% away from there, right? So it's not a tremendous amount of dispersion between where we sit in price. And so, if you're thinking about momentum picking up and potentially making decisions on that, you should certainly doesn't necessarily have to take a whole heck of a lot for us to get above there. And we'll be waiting for Jessica's commentary in the weeks to come as well. All right, Jessica, let's take a look at the trade that you brought to the table today. What are you evaluating? What are you thinking about?
Absolutely. I've been thinking about the consumer quite a bit. So, coming up on a screen was American Express. We're in the midst of earnings season. They've already reported. They had a great earnings beat. But American Express, specifically, when we're thinking about credit cards, they represent the high credit quality consumer base. But they also build businesses as well. They're fee based, and that adds to revenue. So, their build businesses are reaccelerating, especially as we see corporate travel picking back up. Their US consumer was up 8% year over year, and that large and global enterprises, so that corporate work up 5% year over year. So that's good signs from a spending and credit card view. From the technical perspective, again, same method here. 13, 26, and 40 weekly moving averages. I need to see the prices increase quarter over quarter. This time, instead of the 13 weekly acting as resistance like we see on the S&P 500, the 13 weekly is acting as support. And that's around 20 or 221. Remember, moving averages for our listeners are moving targets. So they do adjust. So right now that's about the level. The trade that I'm looking at for this, so I'm actually looking at a covered call because the momentum that I see here, I want to allow upside potential to my chosen strike price. So earlier today, when American Express was about $231.68, let's say we purchased that around that 233, I'm selling the June 21st 250 call. I'm collecting about $1.80 worth of premium, so 180 altogether. But what I'm taking into account in this specific trade is capital appreciation. So with this covered call, I'm giving up my upside potential, capping it at 250 a share. However, that premium I'm utilizing to add yield to my portfolio while potentially collecting the dividend. I do have assignment risk now that I've have this short call, but additionally, I still maintain that stock ownership risk as well. So I want to continue to own this stock. I have the risk of stock ownership. I want to reduce my capital expenses, or in other words, add some yield to my portfolio by collecting that premium, but I give up my upside. It's the give and take with options, if you will. So that's how I'm looking at American Express today, KV.
Thank you, Jessica. A couple of points I want to clarify for those in the audience. So, a few things that you mentioned. If you already own American Express, right, and in order to do a covered call on the stock, you need to own 100 shares to sell one call against those 100 shares, right?
Mm-hmm.
If you already own American Express, you would have had to own it on the 3rd of April because the ex-dividend date for this upcoming dividend payment, which is going to be coming up on May 10th, was the 4th of April. So if you owned it on the 3rd of April, you're going to get paid that 70-cent dividend on the 10th of May, which is, in just over a week here. If you did not own the stock already since that particular date and you're buying it today, let's say, and you're doing a buy right where you're buying the stock and selling a call, you're not going to be privy to the upcoming dividend payment. But the next ex-dividend that you should be on the lookout for is going to be coming up very likely in the month of July, right? Jessica is choosing the June expiration contract, that 250 strike that she's selling in the month of June. If you don't get assigned and you continue holding the stock, be on the lookout for that X date coming up in July, first week or second week, very likely, but that will be announced by the company. All right, very good. The second thing I wanted to mention is the fact that even though American Express by itself, it trades a lot of shares on a daily basis, millions of shares. In fact, if you take the average over the past 90 days, over the past 30 days, but options contracts, they do trade, but not as frequently or often, maybe as some of our listeners would be used to if you're a trader of, let's say, the top 100 or top 10 stocks in the S&P 500 with greater liquidity. So my point here is that the spreads are a little bit wider, the bid offer spreads on those options. And we would obviously encourage you, right, as strategists to be entertaining the utility of limit orders when you're accepting, the amount that you're willing to receive or what you're willing to pay when you're closing out this trade. Excellent, Jessica. Well, we'll have to move on to the next trade idea, and I know that this is Tony's trade idea. He's not with us here today; he's traveling, but you're going to be covering it for him. So let's go ahead and take a look at that together.
That's right. So this is Tony's investment fundamental thesis on PayPal. So another consumer-oriented stock today. They've lost a majority of its market value over the past 3 years. We've seen it decline, and it's likely not on a lot of watch list of investors. But there's some recent strength that Tony saw within PayPal, and it warranted a second look in his opinion. And he liked the fundamentals. He thought it was quite strong, and the risk reward looked favorable. So his method, that's there. Digging deeper into the data, PayPal's shed about 80% of its value in the past 3 years, but within the past 6 months, it started to form a bottom. We're looking at it technically, a series of higher highs and higher lows, and it has that potential for a breakout higher from what he sees as the resistance level of $68. And he's targeting the $73 gap fill level above. So
Mhm.
more about the PayPal. They spun off from eBay, right? We know that, and they've continued to innovate with their payment system, and they're really have impressive growth in his opinion each and every year. So pulling the fundamental data, they're averaging about 15% EPS growth over the past few years, improving and expanding operating margins over 16%. In his opinion, it's cheap being 12 times forward earnings, especially if you're thinking about the 13% EPS growth that their analysts are expecting within the next few years. And he's also looking at debt and strong cash flows if with risks he's seeing relatively low with PayPal with those valuations. So that's his thesis. I went ahead and assessed it technically and brought in my charts, Constantine. And again, same method. So and it was great to talk through this one with Tony because I like to see the 1326 and 40 flattening to indicate a basis forming. And there's a shift to a bullish trading cycle. The inverse is also true. And I also would like to see this close above the January 22 high of 68.21, which lines up with the resistance that he outlined as well. So I see that as a major area of supply. And I want to ensure or visualize this on the chart with that weekly close. When we have this major area of supply, my question then is this area of resistance, is demand going to prevail? And then when that happens, I will shift to more bullish. So therefore, the way that I would structure the trade is based on my sentiment, neutral in the short term, longer term bullish based on this close. And so, of course, this would be adding to a longer term portfolio type of trade, which as an options trader, I utilize the obligation found within a short put and I deploy a cash secured put to potentially buy the security. Same risk exposure in a way as the covered call because I have an obligation to buy the stock. I have the same risk potential of full stock ownership and I'm obligated to purchase those shares at the strike price. So the way that I'm structuring this earlier today when PayPal was about $66 a share, selling the June 7th 65 put, so it's very close to the money strike price, collecting about 183 altogether. So the intent is creating this obligation. It's still a neutral to bullish play. I want to utilize that premium to offset the stock ownership exposure if it were to move adversely, and I would be required to buy PayPal at 65, or rather obligated to buy PayPal at 65. But that premium, again, acts as yield, reduces my overall capital expense, and it's a way that I'd utilize options to add it to my longer term portfolio.
Yeah, Jessica, great breakdown. Obviously, a very straightforward structure. I'm not surprised you're used to doing these strategies, and I think this one is interesting. I think we should be adding it to our watch list, even if we're not doing the trade necessarily, right? For those of you who are paying attention to Jessica's resistance levels, uh, if uh, if it starts to break out, if it starts to knock on the door of where it was just trading post its own earnings announcement a couple of days ago, right? Maybe this one will be worthy for a revisit to see if there are some other potential strategies, right, that you would want to implement. At the end of the day, if it's a very long dated base and the stock is starting to break out, maybe it's worth a second look. It's
Absolutely.
not there yet, folks, right? That's the why Jessica decided to be neutral bullish here for now. And if the stock goes sideways or goes higher between now and about a month from now with this selection of the particular expiration of choice, then the strategy is probably going to be working in your favor, right? Jessica, you said you wanted to add it to your longer term portfolio. So effectively, if the stock does end up going lower, you are going to be willing to buy the stock, right? And then figure out what to do from there, correct?
Absolutely. So, utilizing the obligation found within the short put, I'm okay with purchasing the security. But of course, we have to adjust and consider our investment thesis and make sure it's still sound when that does happen. Always monitor.
Excellent. Always monitor and always be on the lookout, right? Keep your head on the swivel. That's excellent. Jessica, speaking of keeping our heads on a swivel, giving the vast flow of information and news right now, what should our listeners be on the lookout for in the next couple of days going into next week when we meet again?
Absolutely. I mean, even today. So we've got Apple reporting after the close today. That certainly has potential to move markets, large piece of cap within that index. Employment tomorrow, that's going to be a big one. But next week, we got consumer sentiment and a lot of Fed speak, more earnings to discuss. So a lot to watch. We'll watch those technical levels and reassess and monitor once more next week.
Very well. Well, this brings us to a close here today. I want to thank all of our viewers for tuning in today. Don't forget, of course, that the Trading Strategy Desk does host an In the Money follow-up session. That would be tomorrow, Friday, 1:30 Eastern Standard Time. You can sign up for that by going to fidelity.com/, in the money follow-up. You can always find everything that the Trading Strategy Desk does and is involved in by simply going to fidelity.com/coaching. And if that wasn't enough, well, you can always stay in touch with the Fidelity's weekly investor newsletter as well. Fidelity.com/active investor weekly. Give us a look. And in the meantime, take care. Best of luck. We'll see you next week.
Thanks, KB.